All right, so this is a really weird perspective that I see some people have, and I just wanted to correct it because it is ultimately holding you back. Now, this underlying philosophy that Melba has is on the belief that if I implement a tax minimization strategy, whether it be a negative gearing strategy, whether it be a concessional contribution strategy, whether it be a small business CGT concession, or any other type of tax concession that exists under law, that as a result of me exercising that tax strategy, that my money is coming out of somebody else's pocket, an individual's pocket. Let's just, for the purposes of this conversation, call that person Barbara, okay? So Barbara, as a result of me implementing this tax strategy, has been disadvantaged, and she has less money in her bank account as a result of me doing that. That idea, that philosophy is fundamentally flawed, because a tax deduction is essentially that when I submit my tax returns, let's say, for example, I make $500,000 this year in personal income, okay? On that $500,000 of personal income, let's just assume that my marginal tax rate says that I would pay $200,000 in tax. And let's say that the tax concessions that I'm exercising by way of negative gearing and concessional contributions to super allow me to deduct $50,000 from that, which essentially means that my taxable income comes down to $450, and then I just pay my marginal tax rate on the $450 as opposed to the $500. So let's say, for argument's sake, I end up paying $170,000 in tax as opposed to $200,000 in tax. It is not putting my hand into somebody else's pocket. It's just an amount of tax that I don't have to pay as a result. Now, the government strategically implements tax rules like this in the economy because of the trickle effect that happens in an economy, right? That they've proven and this goes back to the US, where they had tax rates, I believe, up to like 95%, is that when people have no incentive to go and earn more money, or have no incentive to grow bigger businesses, or have no incentive to invest, meaning that the government is taking more of the income or the earnings that they produce as a result of that activity than they get themselves, then the activity stops. And it's actually been proven that lower taxation and more tax incentives actually have a bigger stimulus impact on the economy and have a greater trickle-on effect, particularly to lower socioeconomic people that exist in an economy, right? It is my tax dollars that I ultimately pay, because trust me, I pay lots more tax than I suspect that you do in the probably 99% of the Australian population. That it's the trickle-on economic that is associated with the overall tax that I end up paying that pay for all of the social programs that exist in Australia and that ensure that our economy is actually in a surplus right now, as opposed to being in a deficit, for example, like the United States. So you just need to understand that these rules exist for a reason, and you have a choice. You have a choice either to understand them and use those rules to your advantage, because it allows you to be in a better economic position, to build more wealth, to have more disposable income so you can provide for your family. And if you want to give back, then you can use your discretionary earnings in order to give back to people, right? Or you don't learn the rules, or you don't agree with the rules and you decide not to implement them. And that's ultimately your decision, but I know what side of the equation that I'm on. So I think it's just important to look at the tax system objectively. Sure, you may disagree with tax minimization, you may disagree with how the government spends money, but there's nothing that you can do as an individual to change those things. The best thing that you can do is to maximize your financial position and then utilize the resources that you've got to go and enact the change that you want in the world. That's certainly what I'm doing. Wish you all the best.